Gotta get them going, man. Gotta get them going. You ever wake up one of those days, you're like, ooh-wee, I want it today. Today, I woke up like that. Today's one of those days I'm like, ooh, let's get into this, baby. All right, guys, a lot to get into in today's video, including what that title is there. We're going to discuss that as well. And I want to share opinions on a lot of different things going on out there, what's going on in the market, earnings, things I've messed up on, things I've done well, in kind of different perspectives. Hope you guys enjoy this as always. It's a juicy one. Oh yeah, baby. Gotta get them going, okay? So first off here, Elf Beauty cannot be stopped. This company reported earnings just a bit ago, and absolutely amazing numbers. Like, I was looking over the numbers, and this is a stock I've sold almost all my shares of over the last few years, and what a mistake. I mean, what a huge, colossal mistake. Just every share I've ever sold of this stock, I've just ended up regretting it over time. They've done way better than I ever anticipated. And we're going to look at the numbers in just a moment. And, if you're a long-term investor and you are in special companies that continue to just do better than you ever expected, usually it's best to just hold those babies and not let those babies go. And Elf, this was a stock at the peak, I probably held, probably over 10,000 shares of this, if not more than that. Maybe I held 20,000 at some point. I don't know. It was a large number. And all I have left now is 1,000 shares of this stock. And every share I've ever sold of this stock, I've ended up just regretting it over time, because I've looked at it and I'm like, they just continue to do better and better and better than I ever anticipated. And when you're in those sorts of companies that just are doing even better than you anticipated, you kind of just got to hold on for dear life. If we look at Elf Beauty, when I got in this stock back in the day, this was a stock that was devastated. It was a stock that it was kicked and was forgotten, and everybody gave up on this company, essentially. And what I saw in Elf Beauty was I saw a company that I thought was going to be a revenue growth company. I saw a company that I thought was going to resonate really well with the younger generation. I looked at their product reviews and what people's opinions were on Elf Beauty products, and they were extremely high. They were very affordable products, so I always thought, well, if we go into some sort of recession or whatever, like Elf's still going to do well in that sort of environment, because if people are trading down from much more expensive makeup, like Elf has great quality products for much cheaper prices. I watched what they were doing with influencer marketing, and I was just very, very confident. So I bought a ton of shares of this stock when it was like $7, $8, $9, $10 a share, right? And it made me a ton of money over time. And like I said, I sold out a lot of my shares, 15, 20, 25 in those sorts of prices. And ultimately, I've just regretted every share I ever sold of this company, because they've just continued to do absolutely phenomenal. Net sales just increased 26%. Primarily driven by strength in national and international retailers. Gross margin increased approximately 390 basis points. That's a ridiculous number, to 68%, primarily driven by price increases, cost savings, and product mix, which helped mitigate impacts of higher transportation costs in the quarter. Selling general administrative expenses even increased 10.8 mil, and they still put up these sorts of numbers, right? Net income came in at 14.5 mil on a GAAP basis. Adjusted net income came in at 21.1 mil. I mean, the company just does absolutely phenomenal. And so I think, let this be a lesson that when you get into these sorts of companies that maybe are a turnaround play, or everybody's just forgotten about it, like an Elf Beauty was, right? Where no one wanted a piece of that stock, and they just continue to outperform what you even expected. Usually it's best to just hold those babies and put them in the filing cabinet and let those babies run, man, because, sometimes when these companies are doing even better than you, because you're only going to buy a stock if you're super bullish on it, right? That's the only reason to buy a stock. So if they're doing even better than what you had anticipated, which Elf has done nothing but better than what I anticipated, it's usually best to just forget about it, let that baby run, because that's a special, special company. If they ever start doing worse, then you can go ahead and you can cash out some shares from there, or if you got much better stocks to put the money in. Now, in terms of my next Elf stock, it is Honest stock, in my opinion. This is going to be my next Elf stock that I'm going to make several 100% on. This is a stock that's completely forgotten in the stock market. They went IPO, in 2021 after everything had already been hyped out, essentially. Honest, I think, will probably be, I know for sure I'll make a lot more money, like dollar amount, because I have a lot more money than back when I was buying ELF stock, right? So I'll make a lot more money on Honest. I think I'll make probably just as big of a percentage gain, if not a bigger percentage gain, because Honest, in my opinion, is going back to $15 to $20 range over the next few years. And so I think I'll make just as big of a number. But the thing with Honest that I'm going to learn, that I've learned from ELF, is when that baby goes on its run, I'm going to let it do its dang thing, okay? And as long as they got the numbers, I'm just going to let it be. I'm not going to try to cash out a bunch of shares when it goes to $10 or $11, something like that. You know, the biggest mistakes I've ever made in the stock market are not stocks in which I lost money on. It's the biggest mistakes I've always made is taking profits in stocks too soon. That's consistently the problem, including the next stock we're going to get into here. I've sold most of my shares in that stock. You know what? I regret every share I've ever sold of this particular company, okay? And you just got to let these babies run, and when they're doing better than you ever anticipated. Good old Tesla, my Tesla. I've sold by far and away the majority of shares I've held in Tesla, and I regret selling every single share I've ever sold of Tesla. Every single share. And yes, I made ridiculous profits on it, and you can say, well, a profit's a profit. You know, I understand. But at the end of the day, I still regret every single share I've ever sold of this stock. And all I hold now is 500 shares, and I'm thankful to still have 500 shares, but that's such a small amount compared to what I used to hold back in the day. You know, and Tesla just continues to be way better than I've ever anticipated. I used to think like Tesla would be like a half a $1 trillion market cap by like the end of this decade, okay? Obviously, they've blown way past that. But when it comes to Tesla, revenues, the profitability has been what has amazed me more than anything. Tesla, I never saw them getting to this scale of profitability this quickly. I never saw them getting to these sorts of margins this quickly. And so when it comes to Tesla, I'm just like, oh my gosh, man. You know, I regret every share I've ever sold of Tesla. I mean, the numbers they've put up over the last, I would say, several years have just been nothing short of extraordinary. And you just kind of got to stay out of the way when it comes to stocks like Tesla. And, you know, I understand like some people get real mad at Tesla, right? And, you know, usually it's short sellers or it's people that don't hold the stock because they're like punching air, like, that's so stupid. The stock shouldn't trade at a 75 forward P. Look at these other companies and things like that, okay? Here's the deal with Tesla. They have industry-leading margins. The margins, you know, are likely just going to continue to get better as they continue to scale this business bigger and bigger over future years, right? The revenue opportunity is ridiculous for this company. I think I don't care if you're bullish or bearish or whatever, you got to acknowledge the revenue opportunity for this company. You have to acknowledge, if you don't believe that Tesla's getting to 5 to 10 million cars a year over the next few years, like, I don't know what planet you're on, because it's just like, that's where they're going essentially. And so it's a huge revenue opportunity. It continues to be a margin story, and it continues to be a story about profitability getting to places like we've never seen for automakers before. And part of the reason is they don't have to deal with the dealer network. Part of the reason is the way Tesla builds these vehicles is just so much more intelligent than anybody ever has for vehicles ever in history. And so on top of that, you have a shareholder base. And keep in mind, with Tesla's shareholder base, this has taken 10 plus years to build out this sort of shareholder base around this stock, okay? And they call it a cult. I call it. It's a cult-like shareholder base, okay? And it takes a long time to build that shareholder base, where this shareholder base, they're not concerned with any short-term crap, okay? Short-term traders will come in and play Tesla stock from time to time and maybe sell it off heavy or buy super heavy and move the stock price around a little bit like that, hedge funds and things like that. But the majority of these folks that are in Tesla stock, they don't care about short-term FUD and this and that and this and that, because they've gone through so much of it for so many years that now it doesn't matter. It doesn't matter. And like I said, usually short sellers and other folks that don't hold this stock just get very frustrated with it and mad, and like, it should trade a cheaper forward P, it should trade a cheaper trailing 12-month P. And it's like, who has this sort of growth? Who has these sorts of margins? Who has this sort of opportunity, right? And what company's innovating at the pace Tesla's innovating at? No one. And is there competition? They always say competition's coming. Let's be honest. Tesla's in their own league. There's no such thing as competition for Tesla. There's competition for all the other automakers. They're all competing against themselves. Tesla is the Usain Bolt of automakers. They're out there so far in front of people, like, it's not a race. It's not a question of who's going to win the race. Tesla's the Usain Bolt. They're going to win the race. If you want to pay attention to who's coming in second, third place, that's going to be a close battle. Okay, is it VW? Is it Toyota? Is it GM? Is it whoever? Right? Is it Ford? That's where the real race is. Tesla's so far out in front of these people, they ain't catching up. Okay, bottom line with that. And so good old Tesla Maesa. They can get mad at it. They can say whatever they want. But the fact is, this company just is running their business at a pace that's as good, if not better, than just about every single other public company in the world, to be honest. Okay, now when it comes to Chef, this is my next Tesla stock, and I am 100% confident in that, okay? There's so many similarities I see between the Chef and Tesla Maesa, it's not even funny, okay? When I looked at Tesla, like what made Tesla such a special company? It's that the fact that company keeps the pedal to the metal, they keep innovating, they keep coming out with new stuff, they keep changing the game, they're never satisfied for a second at that company, okay? Which is very, very different than any of their other competitors, if you want to call them that, in that space. And what I see with the Chef is I see a company that's just running laps around their competition. They keep the pedal to the metal. They keep innovating. They keep coming out with new products, new ways of doing things. I look at their packaging. I look at everything they're doing, their marketing, right? And this company's doesn't get complacent for a second. And they're in an industry where everybody else moves at a snail's speed. Like if you think automakers move slow, you haven't seen the food industry yet. The food industry and the food giants, they move like innovation in that space is like coming out with a different product size or something like that. It's ridiculous, okay? And so you've got the Chef coming in here just shaking things up, and no one, they're going to run their own race. They will be the Usain Bolt of food over time. And right now it's not easy for everybody to see it. I understand that, just like the Tesla opportunity was not easy for most people to see that when I was getting in that stock in 2018, 2019, right? But over the coming years, everybody will see it and they'll realize, oh my gosh, this company's playing a whole different game than everybody else is playing in the food space. It's a huge revenue story that, when does a Chef stop growing? I don't know, but I don't see it anytime in this decade, essentially. I think they're just going to be able to grow massively year after year after year, 10, 20, 30% a year, every year, and just keep growing and keep growing, right? It's going to become a margin story in 3Q of 2022 and after, essentially. And when it comes to Tesla, like what made Tesla so special was not just the fact that the company continues to innovate and push, forward, but and not just the revenue story, but the margin story at Tesla is unbelievable. And everybody saw Tesla and they're like, this is some huge money-losing company. They used to call it a money furnace. They're just burning money and their margins are horrible, blah, blah, blah. They never understood that once Tesla got to scale, they were going to get all these cost synergies, and the way Tesla was going about their business was so much more intelligent on a long-term basis than everybody else was doing. And vertically integrating is very costly to a manufacturing business up front. And guess what? The Chef is pretty much the only vertically integrated food company you can pretty much find out there, right? And so it's a very costly endeavor when you're in your first few years of major growth. And it makes your margins look horrible. It makes your profitability look horrible. Everything you're doing looks bad. Your cash flow situation, because you're likely spending on new factories that you actually own, new equipment, all those sorts of things. And so it makes you look like you're literally just a money furnace. But you got to have a little vision past like what's going on today and like view these things out and how things are going in a year from now, 2 years from now, 3 years from now. And then you start to see the margin story come together. You start to see the profitability story come together, right? And then everybody starts realizing, and that's when all of a sudden Wall Street starts hopping on, as they did with Tesla, right? It takes time for this to kind of play out, and people want the results today, and it's like, you're going to see a margin story emerge to the back half of this year in the Chef, and it will just get better and better and better. And then they're going to end up in industry-leading margins. You'll see margins at the Chef, in my opinion, a few years from now that will be better than any other food company out there, bottom line. And everybody's going to be like, how did they do this? How did they do this? I don't understand. Oh my gosh, like the margins used to be horrible, and now look at their margins. You just wait on it, okay? Now, also, they have an unstoppable brand, and this is something that's special in any industry where you have to sell to consumers. And this is a brand we see the sell-through. It's off the charts when it comes to Chef. And you can't just magically make these sorts of brands overnight or something like that. Like what the Chefs put together here in terms of how much excitement there is around this brand, the sell-through is ridiculous. How much SKU expansion they continue to get in these retailers because their sell-through is just insane. That's an unstoppable brand, and you don't get in the way of unstoppable brands at the end of the day, right? And what's going to emerge in the chef, and it's already starting to emerge, is a very strong shareholder base now at this point in time. Is it anywhere close to a Tesla shareholder base? Absolutely not. The company's way too young right now. I think it will get to a very, very strong shareholder base over time. I don't think it's ever going to get to the scale of that sort of shareholder base that Tesla had, right? I think that's just kind of a one-off scenario there. But I already see kind of like let's just call it a strong following building around the chef. And a lot of people on the DL are huge believers in this company, as with Tesla back in the day. Tesla, keep in mind, let's rewind to 2018, 2019, okay? In YouTube, there were only two core people that were talking about Tesla stock consistently back in those years, okay? One was myself, and one was a fellow named Galileo from a channel called Hyperchange, okay? As Tesla stock blew up over the last few years and went to the moon, almost all these channels come out and they talk about Tesla stock, this and that nowadays, okay? And that's cool and that's great. But remember, in those early days, back then when Tesla was going through the tough times, there was a lot of people that supported Tesla and were believing in that company, investing in that company, but they did it very quietly because people don't like to come out and admit that they're investing in something and they're proud of something when the share price is going down like Tesla was doing back in the day, right? And so we have a very similar thing emerging in the chef right now, where there's a lot of people that are buying the stock and loading up on shares kind of on the DL over the past few months, essentially. And, I think that the community will build much stronger as that stock price goes up, because no one, other than maybe a crazy person like myself, wants to come out and speak about a stock and be super excited about it and put their brand behind it and all those sorts of things, right? People don't like to do that when the stock price is going through a tough time. And I understand that. Most people are normal. That's just how it is, right? And then you got a couple of freaks like myself, and, I'm never scared of anything on YouTube. I cover my losses. I cover my wins. I don't care. At the end of the day, the story's going to tell itself over time. That's just how I feel about that, okay? As far as a chef, I added up all my shares on my different accounts. I'm up to 96,337 shares. I'm going to try to get to over 100,000, hopefully over the next month or two. And I'm going to just continue to build the shares. The main thing I'm also learning in the chef that I want to adapt, that I made mistakes with in some of these previous stocks that were huge winners for me, is I stopped buying those stocks once they started to go up. And like I spoke about, selling those stocks is also a bad decision on my part, but also not continuing to buy. And so as the chef's going to go up over the next few years, I'm hoping I continue to buy shares in that stock to build my position bigger and bigger and bigger. Same thing with a company like Honest and, those sorts of stocks. As the story gets better, the revenue story gets better, the margin story gets better, the profitability gets better, the free cash flow gets better. Yeah, I need to continue to buy shares in that stock because I believe that company's going to a place where they're going to do $300 million plus of net income by the end of this decade. If they get to that place, the company's going to command anywhere between a $5 billion market cap and a $10 billion market cap if they go to where I'm going. You run the numbers on that, that's a 10 to 20x type stock, okay? So that's what I see personally in the chef over the coming years, and I just need to continue to load up on shares. And I as far as it's never going to be your next Tesla stock, I don't care. Everybody doesn't have to believe me in that. That doesn't matter to me. All I want to do is just have this out there. So like I said, there's very few stocks I ever build my brand around, and Tesla stock was one of those. Right? In the chef, I'm willing to build my brand around that stock, and as that stock thrives in future years, as I believe it's going to thrive, there's only going to be one person who was out there supporting that stock and believed in it in the dark days and when margins look bad and free cash flow look bad and profitability. And then other people say, well, it might fall on this earnings because their margins aren't going to likely see any improvement. They already said that, things like that, right? I don't care. Fine, drop the stock. It literally doesn't matter. I'll buy more shares. I'm planning on buying more shares of the stock anyways. People act like that scares me or something like that. It's like going into a boxing fight and being like, I might get hit in the face. You're going to get hit in the face, stupid. This is what happens. So for me, if the stock price goes down, I'm not scared of that. It doesn't scare me, man. Put it down. I'll buy more shares for a cheaper price. I believe that stock's going where I think that stock's going over the coming years. And that's all that matters. It's like playing a football game, tackle football game, playing quarterback. You'd be like, I might get sacked. I might get hit. Oh, gosh. Of course you're going to get sacked. You're going to get hit, man. That's part of the game. Don't be scared of it. Just welcome it at the end of the day. That's just part of the process. It's part of the game. So that's just kind of my opinion on all that. And for me, it's going to be my next Tesla, and I cannot freaking wait. The biggest thing I'm just worried about is I just got to make sure When that comes, that I approach it from a thankful perspective. Let's just call it that. Because, with how much I've had to go through and how many people have doubted me, it'd be very easy for me to come back and be so cocky, like unbelievably cocky. But I'm going to just try to approach it from a very thankful and humble perspective. And although that's going to be damn hard, man, because, they put me through it the last few months. They try to bury me. And, man, I'm the Undertaker, There's only one people that buries people, and that's me at the end of the day, okay? And we know that. Revolve, let's talk about that one. Next up here. So Revolve has fallen, down 13, almost 14% here today. And, this has been a stock that's performed very, very well. We're up about 145% on it. And, this is one I'm kind of very tempted, honestly, to start buying this stock again. I have not bought it for quite some time. I shared this recently, and this is the shares I bought in Revolve here in the public count over time. And I got some, look at all the different prices, 16, 13, 12, 9, 8, right? And this is why it pays to continue to load up on a stock that you believe over the long term and continue to buy shares as that stock price goes down, right? And so that's obviously what I did in Revolve. But when it comes to good old RVLV, I gotta say, I'm pretty darn impressed with their numbers, okay? Continued strong growth in active customers was a key of our results, highlighted by quarterly growth of approximately 124,000 active customers during the second quarter of 2022, the highest ever second quarter. Total active customers grew 2.2 million, an increase of 39% year over year. Total net sales were a record $290 million, an increase of 27% year over year. Gross margin was 55.9%, an increase of 29 basis points year over year, our highest gross margin for a second quarter ever. I mean, I got to say, they're freaking running their business damn good. And RVLV is another one of those that I look at and I'm like, they're running their business even better than I anticipated, right? Our effective tax rate is what hurt their profitability because they used to have a bunch of losses they could write off against. That doesn't work like that anymore, unfortunately. And do keep that in mind, for future companies that are money losers right now, when they get to profitability, and if those companies get to profitability, they can essentially write off those losses against, future gains and profits and things like that in the future. So do keep that in mind. But when it comes to RVLV, I would almost call it a bit of a pickle in terms of RVLV because I'm like, do I want to buy RVLV shares right now or do I want to wait a bit and continue to buy some stocks that are down heavily? And that's the biggest thing, that's a tough decision to make. And you got to kind of figure out where's the best risk reward. That's what I bring it back to. So if I invest in RVLV, is that a better risk reward for me versus, let's say, buying the Chef or buying, Honest or buying, whatever stock, right? PayPal or Meta or Amazon or some of these other stocks I bought over the last couple months. So that's the biggest thing for me trying to figure out with RVLV. I'm going to have to run my profitability metrics, what I think net income is going to over the next few years, and try to figure out if it's worth it at the current price, right? The risk is always recession, and even though we're probably already technically in a recession, does it get worse? If it does, could that hurt a business like Revolve? It could potentially. There's no doubt about that. The good news for RVLV is their average spend from a customer is considerably higher than most companies out there, right? And so they, generally speaking, it seems like they have a more affluent customer base than I would say most, let's call it companies that sell clothing at the end of the day, okay? So that's just something I'm considering. I'm also considering the fact that if there is a major recession, let's call it a deep one, well, that would put a lot of these other companies that sell clothing under because a lot of those companies are barely making as it is. So RVLV would end up in a situation where they have even less competition against them in that sort of environment, which long-term is even a better thing for them, right? So, yeah, a lot of different considerations. That one's just kind of a tough one. If you guys have an opinion on RVLV, let me know in the comments section. I'd love to hear from you guys, as always, as far as that one goes, okay? Can somebody tell Palantir to chill? Like, I wanted to build out a nice size Palantir position, maybe like, $50,000 or $100,000. Not like a crazy big position, right? It's not like it's my most, let's call it my most confident stock, but I thought, the risk reward is very, very attractive for the stock recently. And I don't own anything in this space. So I thought Palantir is perfect kind of position for me to build here. And the stock just keeps going up, man. I'm like, chill. Can you calm down, Palantir, for like a little bit here? I don't know what's going on with Palantir, man. That one's just going risk on right now. It's up 42% since I bought it, and it's not even that long ago I bought this stock. So please chill, Palantir, okay? Now, here's what's going on in the market, right? Because everybody sees these stocks starting to move up over the past, let's call it a month or so, month and a half. And they're like, what is going on here, man? Specifically over the past month, like, man, these stocks just keep moving up, right? So remember, in the first half of this year, we had the worst first half of the year for the stock market in more than 50 years, okay? Now, if you have the worst stock market in over 50 years, it's going to put a lot of these stocks in a place where they're going to run out of sellers. The bottom line, they're going to run out of sellers. And so the stock market, when it goes through that sort of a dramatic time period where everybody's just selling, which if you're going to get the worst first half of the stock market in 50 years, you're going to need like everybody just mass sell. You're going to need retail selling. You're going to need hedge funds to sell. You're going to need institutional money. You're going to need everybody just cash and left and right? So we had that play out. But then when you start running out of sellers, right, and you are priced in so much bad news and so much devastation, that all of a sudden it's like, okay, all you need is a little buyer momentum, and all of a sudden stocks start to drift up. And that's how you get a Palantir up like 42% since I bought that stock like a snap of fingers ago. You get like that because you just started to run out of sellers. It's like everybody, Kathy Wood sold out of that stock. Everybody sold out of that dang stock, okay? And so all of a sudden, all you need is a little buyer momentum, and there's not much selling pressure on the other side. And so the buying pressure just starts outweighing the selling pressure, and you start to see a stock price go up and up and up. And that's exactly what we've seen play out here. And it's interesting how the stock market works like that. And you get into other markets if you're in a high-flying stock market where eventually, the buying pressure just is not there anymore, and there's just too many people wanting to take profits and sell, and that's how you get the stock market to go down, okay? Now, looking at a heat map here today, it was very interesting. We see an interesting kind of phenomenon going on out there at the moment, and this is one in which the safety stuff, or what is seen as like the safety stuff, I call it more the risk-off stuff. So if people aren't looking to take risks, they kind of flood money into these things. Things like healthcare, consumer defensive, energy. You see these continue to just kind of sell off and be in kind of a tough place. Meanwhile, where's money flowing into? Well, look at the green. Look at Tesla. Look at Amazon. Look at Meta, right? Microsoft was green. Adobe was green. Nvidia, Qualcomm. Google McDougal had a slight green day today. Netflix. So you clearly see there's a movement from some of these, let's just call it risk off into risk on. And this is something we kind of see playing out here at the moment, where a lot of money's flooded to these spaces to hide out. And then you've got a bunch of money that just went to cash, essentially, right? So this is just kind of something to think about, and it's something we obviously see playing out in the market right now, okay? Now, inflation went through the roof, right? So here we are in this situation that's very interesting when it comes to inflation, because inflation went so ridiculous, right? 9% plus, that we got to such numbers that when we start coming down, people are going to feel like it's not that bad. So even when we go down to like 6% inflation, 6% inflation is still extremely high, okay? But when you come off 9% plus, it seems like, oh, it's not that bad. When you go down to 4% inflation is still pretty darn high. But when you go down to 4% inflation, when you were at 9% plus, it seems like, oh my gosh, this is amazing now, okay? And so that's the psychology of kind of what's going on in the financial markets now, where we've priced in the worst case scenario now at this point, or at least we did last month when we got that 9% plus number. And everybody freaked out. And now all of a sudden it's like, okay, it's almost guaranteed that inflation goes down over the next several months because energy is going down considerably. That's the main thing. Also, the comps start getting tougher and tougher because you're comping against, starting to comp against months that already had big inflation numbers behind them, right? So now you're just in this situation where, the market has already seen the worst when it comes to the increase of inflation. And now as we start to drop this inflation rate, right, even if we're at high numbers, it's going to seem like, oh, it's not that bad. That's what happens. That's psychology of the financial markets there, okay? Now, for the next few trading days, the market's in kind of no man's land because we don't have any major earnings coming now at this point in time. We've still got a ton more earnings, but no major companies. Meanwhile, you got CPI coming on August 10th. I'm recording this video on August 4th, okay? And so this is an interesting situation here where the stock market could drift higher. We'll see what happens with that, but it's kind of going to be in no man's land for the next few days, and then everybody's going to anticipate this number. Maybe we get a big sell-off the day before CPI or 2 days before CPI comes out. People just kind of worried that maybe the number is going to come in again at a 9% number or super high 8s or something like that. If we are going risk on into that, I would say there's maybe even some people that have some information ahead of time or something like that, which, yeah, that stuff does go on. Hope you guys enjoyed this video. As always, if you're looking to join my private stock group, learn how to value a stock so you know if it's overvalued, undervalued, fairly valued, how to value growth stocks as well, which is very important. If you want to learn how to understand financial statements like a CPA would, if you want to get access to my dividend investing mastery course, my Becoming Master of Stock Market course, my Thriving in a Recession course, which I just put a new video together last night in there. It's a very helpful video about how bigs get bigger in a recession. If you want access to the private Discord chat to connect with myself and the other 6- and 7-figure members and all those sorts of things, check out pinned comment down there and apply to join us in there. Much love as always. Have a great day.